Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, as usual, let's take a look at the gold market. As you can see, although we have got a really early signal from the MACD hidden divergence, it's a bullish sign that we have discussed in the weekly research and market indeed is continuing to move higher. But retracement that we have counted on yesterday hasn't happened, or better to say, it was not too significant as we have expected. It was really very small, and markets continue to move higher. So in general, this upward action stands in agreement with our view on the gold market and the view that we have on the fundamental picture of the Fed policy. We think that Fed will let economy to be hot a bit, and it will stand one step back on the inflation. So it probably will let inflation to grow a bit before the real strike of the rate hiking cycle will impact on the market. So that's why we think that in the 2017 Fed very likely will stand with the consensus of the free rate hiking. So the major impact of the strict policy will happen in 2018. So that will be a very important year for the investors, for the portfolio managers, because that will change the background to the economical cycle, to the rate tightening, and this could bring us really to the significant volatility on the markets across the board, in the bond market, on the equity markets. So, but this will happen probably later. This a bit conservative approach of the Fed to the rate hiking is mostly supportive to the gold market, because the major driving for the gold is inflation. As inflation grows and Fed will not control it too strictly, that is supportive for the gold market. That's why this upward action that we see right now could become really upward continuation of our medium-term bullish trend that we have on the weekly chart. So, but this is a bit longer perspective. So speaking on the daily setup that we have today, here guys, right now we do not have any significant patterns to trade. As you can see, market right now is moving higher. It has broken 6.8 resistance of this most recent retracement. Is moving above the weekly pivot resistance one. So in fact, market here has no barriers till the top on the daily chart, till the 1267, 1270 area. There's no barriers except daily overbought. So today, as you can see, daily overbought stands at 1252. So that means that upside limit for today's session will be approximately 1252, 1255. So $10 small market would move higher, but hardly it will significantly break this area. So that is probably will become the maximum for today's session. On the intraday charts, guys, we also do not have something special. So take a look at the contracted chart of the gold. You can see that market right now is approaching to the natural support resistance area. The previous low stands here. That is minor 78 fib level. We do not use it very often, but this is, I do not have any other tools to show you right now. So because there's no pivots, this market already has moved above the weekly pivot resistance one. So only natural resistance, daily overbought, and this minor fib level. So that's why we think that today upside potential stands around 1252, 1258 area, 1255 area. Maybe minor bounce will happen after that, but in general, we should keep an eye on the possible dips on the intraday chart. So any retracement down here, this could bring the chance for taking the long position, because we suggest that in the medium-term perspective, this upward action probably will continue.